Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So as euro currency, as other markets across the board have got a great boost from the CPI report. That we have discussed in a weekly report this weekend. Sorry guys for some delay, yesterday I was not able to pass the report, so I'll do it today. In general, this is not just impact of the CPI numbers, this is some cumulative effects, because it's for a long term already some talking stance about the Fed pivot, and it seems that we stand somewhere near the terminal rate. Indeed, by our suggestion that we will see 5 even rate, it's most probable that we will get somewhere around 475. It seems that it might be the terminal rate, so the 0.5% change in December and the 0.25% change in February. This is currently supposedly the central scenario that we're considering. But this recent impulse brings adjustment to the short-term performance. Currently, we do not see reasons to change our long-term target of the 90 even below the parity, because whatever events will happen, European Union will be one step behind. And if in United States we have the CPI around 8%, 7.7 by the recent report, in a rate around 4.75, and we speak about the Fed pivot. In the European Union we have the inflation about the 10% on average. So in Germany this is 11, in some countries this is around 20. And rate, as you know, significantly lower, and well, it might be volatility in the moment when the Fed will come to the pivot to terminal rate, but later the status quo should be reestablished. This could lead for a deeper retracement to the upside initially, but after that the same processes but in a stronger degree will happen in European Union. And they also will have to start the printing machine, but with the significantly higher levels of the inflation. See, approximately one difference around the 2 times stand between the United States and European Union. And from that standpoint, and the industry sector stands in much worse situation in Europe. I do not see the reasons why the fundamental target should not be reached. But in a shorter term, in the perspective of a couple of months, probably could be some difference. Particularly speaking, euro could show deeper retracement to the upside. It's not because of the strength in the euro, it's just because of the changing market attitude and expectations concerning the Fed and its policy. So the epic event actually we see on the weekly chart, so as we discussed in the report, that market has broken the confidence resistance on the weekly chart. Mostly has broken, maybe not quite, but it's making an attempt to do this with the situation of the overbought condition. This is a phenomenal performance for financial markets. Usually financial markets bounce immediately out from the overbought, oversold areas. They are not really like to touch them compared to the commodities. But in the current situation, we see the attempt of the breakout when the euro already is deeply overbought on the weekly chart. This is not common thing, and it just explains you what the trading activity stands behind the current performance, and why we suggest that this action should last a bit longer. Market could reach higher standing levels. So particularly speaking, it might be around 105.81 or 750. This is strong confidence resistance on the monthly chart, and some other interesting stuff might be on the monthly chart. We talked about this in the report, so you could read the technical part for analysis. In the shorter term, guys, on the daily chart, as you understand, market's also overbought, and it comes to the XOP target. This combination, where the 103.50 actually the upper border of the weekly confluence, market overbought on the daily and weekly, and market is coming to the XOP. This combination brings nothing good to bulls. So it's not the point where you're dreaming about taking the new long position, obviously. So you probably need to wait for a pullback. Personally, guys, I like the idea here of the hand and shoulders. So you consider the 50% favorite for euro currency stands around the lows of the potential left arm. I don't know, maybe due to this strong impulse, pullback will be not as strong. Maybe it will be smaller, some intraday confluence. But anyway, idea of the more or less moderate pullback here and some kind of the hand shoulder shape looks reasonable in the current circumstances, especially because of the very strong resistance right there. So personally, since anyway we have no choice, we do not want to get the position right there. Anyway, we need to watch for a pullback here. And then trying to catch the bottom, trying to catch the correctly the potential of this retracement. So on the lower time frame, actually we do not have a lot of things to do. It's just because the market shows no final of this upper direction yet. So we do not have here any signs of the reversal or something of that sort. This is understandable just because market hasn't reached the XOP. So next week I supposedly it should hit the XOP and then maybe something starts to form. Potentially we could say if you, for example, trade on the hourly chart and lower time frames, you could use this thrust for a Judd Napoli patterns. It might be the brand bar, or maybe it will be double repo pattern, something of that sort. For other traders, for a longer term bear traders, you just need to wait for some clear pattern around this area on the hourly chart where it not have something yet. So you could see it's nothing. So just thrusting action by far. For the bulls, I already explained. So we need to keep an eye on some levels. So potentially, if we will not get the 50% right there around the parity, maybe we need to consider confluence areas with the major area 50 pips, 80 pips above the parity level. So maybe a pullback will be a bit small. But we need to see what the shape of the retracement will be, what particular pattern might be forming. That will help us a lot to catch the correct destination point of the possible pullback. That's in 2 words what we could do on the next week. So the forming of the reversal and reaction on XOP probably will take 1-2 sessions. Then bearers on the intraday charts could step in and consider possibly taking the position, while we still will be waiting for pullback and watching for levels to consider taking the long position, support continuation.